All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about YFI. We're going to break down the chart here and also go over the YFII chart. Give you guys some nice breakdowns, go over what these red and green boxes are, what these yellow lines are, and then go over some of the price targets to the upside for those, as well as go over some indicators you guys can use to help give you an edge in the market, such as the MACD, as well as the RSI and the divergences on both of those charts. We'll break down all of that in today's video, so it'll be a good one. So smash the like button, subscribe to the channel if you're new. As always, though, the content provided on this channel is for informational and educational purposes only, so be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out 1 to 2 free trade ideas a week, highlighting the conditions on the chart, and you can see how some of these trade ideas have played out very nicely. This was a short trade idea on this ticker here. All right, and that ended up dropping over 18%. Another short trade idea here with a rising wedge, highlighting some of the targets to the downside, and that one also played out very well. So if you do like free trade ideas and free valuable content, you will enjoy that newsletter. Sign up for it using the link in the description. I also have a Ko-Fi page where you guys can come in here and you can book a personal session with me. I do one-on-one coaching sessions, 30-minute or 1 hour. You just click on commissions and you can book those directly through here, as well as request a YouTube video on a specific topic of your choice. Now we'll go ahead and get right into the video, and we'll start off here with YFI. Okay, we had our overhead supply zone here. We had our demand zone down below. And you see how it says bearish below here and bullish above. Well, let's break that down real quick. So here we have our Fibonacci retracement levels of support, and below the 61.8% level, which was 58.42, we're going to be bearish below there, right? And so you can see we actually broke down through that level, retested it, and then continued lower down to 48.31, which was an area of interest. I mentioned, we had this demand zone here. If we break through this demand zone, it's very possible that we come back down and tag that support level. And you can see we tagged 48.31 here and then saw a very strong rally afterwards. Now, so that's why it says bearish below, and this is why it's going to say bullish above, because we had an uptrend here and we wanted to see if we were going to continue that uptrend and get a healthy retracement continuation, and rather we ended up getting a reversal, right? And so now we've got a downtrend established here, and we need to see if this is healthy retracement to continue the downtrend, or if we can get at reversal, right? And so once you get above the 61.8% retracement level, your odds increase of a 100% retracement drastically, right? And so that would put us back up to a retracement to our overhead supply zone around that 7,500 to about 7,200 supply zone overhead, if we can get above 63.90. Now, right now, things look pretty good on the chart. Okay. We came here, we tagged that key support level. And look what we've made. We've made a bull flag here, right? So this is healthy bull flag consolidation at the moment. We really need to get above 60.48, right? 60.48 has been that overhead resistance that we've been smacking down. And we also need to break through this trend line here on our RSI. Remember, your RSI is your relative strength index. So it's going to give you the relative strength of a token, crypto, stock, whatever it is you're looking at its given prices. And we've seen that we're in bull flag consolidation here, really just going sideways. But meanwhile, the RSI is making lower highs and also lower lows. So this is a bearish divergence, and it's an indicator we could see some bearish activity. But it doesn't mean we have to get bearish activity. If we can actually get a breakout of the bearish divergence, it's very similar to getting a breakout of a chart pattern, right? And in our case, we'd be looking for a bull flag breakout to the upside to take us up towards that 72 to 7,500 supply zone. And what we need to be cautious of is going to be right here on our MACD. Okay, so if you take a look here, we had a very strong uptrend that we tested multiple times here on initially on this move up earlier in the summer, and then we had this bearish crossover on the MACD where the white line crossed below the yellow line, and you can see after that happened, we had a very strong push to the downside. And so right now, the white line is slightly curling above. We need to see this stay above if you're bullish. And if this crosses down below, it could be a signal, right? We already have some bearish divergence forming. And really, if this ends up curling down below the red line and giving us a sell signal, it could be a sign that price is going to come back down. Now, we haven't gotten that yet, so it doesn't mean that we're bearish at the moment. Again, if we can break out of this bearish divergence trend line, then that could give us the breakout that we're looking for in our bull flag, and the bull flag target, again, would take us up towards that overhead supply zone. But needing to be mindful of 63.90 ultimately, right? I mean, if we just dip above here, look above and fail, that's going to be bearish. Okay, ultimately, we need to make this an area of support and start trading above here so that we can climb higher in price to our overhead targets. If we look at YFII, very simple concepts here, right? Old support becomes new demand. So we have old support here. And then you can see we just blow right through this area. So now there's sellers in here. This is sell liquidity versus buy liquidity over here. And then we come back up, retest this zone, sell liquidity, and then we come back up, retest this zone, sell liquidity again. So we do have this overhead supply zone in about 640 to about 580, 590. All right, that's our overhead supply at the moment. And we really need to get a breakout there, right? I mean, if we take a look again, the MACD, you can see bearish crossover, big move to the downside, bearish crossover, big move to the downside. At the moment, it looks like it's attempting a bearish crossover. So we need to be really cautious of that, but things can change very quickly here. This daily candlestick is actually very bullish. You can see we opened here and then sellers pushed the price all the way down and buyers came back in and we're actually closing or currently above where we opened. So if we can get a strong green body close right here on this candlestick, that'll be a good sign that we're coming up to attempt to retest this overhead supply zone. And remember, the more times you test the level, right, whether it's, support resistance, supply demand, however you want to label it, think of it like this, right? There were sellers over here, right? And the imbalance of sellers, imbalance of supply, aka more sell orders than buys, push price lower. Here, we're seeing the same thing, more sellers than buyers, pushing price lower. Now, notice how all of these are wicks. None of these candles were able to close in this zone. And so these wicks means that like price quickly shot up, buyers pushed it up high, but sellers quickly came in and brought price lower each time. And when we came back down into this zone, again, now we're actually closing inside of it. So this is a sign to us that supply is getting weaker. Okay, supply is weaker here than it was over here where we had a straight flush, right? Over here it's a little bit weaker than what it was over here because we didn't get a straight flush. We're able to come back and test this zone many times on the daily chart, 7, 8, 9 times there, but we weren't able to close inside of it. And here we are again testing it, and we had one wick, and then now we had 4 candles open and close within that area right there. So it lets you know that sellers are getting a little bit weaker. This zone is getting a little bit weaker. If we can get that strong body candlestick, we'd look for essentially a break and retest of this zone to push higher to our bullish price targets of 702, 775, 814, and 869. That's going to be the range and targets of bullish price targets to the upside if we can break through that 640 overhead supply zone. But if we end up getting that bearish MACD crossover, which is what we need to be cautious of, 549, 521, 494, and 456. Those are going to be your major areas of support. If we break through those, the key area of liquidity is right around 440 to 360 with a very strong level at 406. If you take a look, we had many candles here on the daily open and close at this 406 level. This 406.7. So that also will be a strong level in that 440 to 360 demand zone, essentially. That'll be it for today's video. Hopefully you enjoyed it. If you did, smash that like button, subscribe to the channel for more, and I'm out.